Right, so putting this our strategy together is very simple. Let's say the price is pushing up this way. Okay, so if the price is pushing up this way, you want a situation whereby the price clears a particular low and make 50% retracement. So if you look right here, the price maintains its low. Okay, this is lower than this, and this is lower than this, and this is lower than this, but this current low move lower than the previous low, which is this. Okay, so this one here have inviolated the whole stuff right here. So now that we are having a new low here, and this low is lower than the previous one, so this is exactly what we call the algo market structure. Okay, and at the same time you're having sweep of liquidity. And remember, I mentioned it's so important if the liquidity sweep happened with just a week, all right, or if just one candlestick. So you don't want to see a lot of candlestick closing below this level. So once you are seeing something like this, you shouldn't be calling it liquidity sweep anymore. So the price can actually play well, but I'm giving you the ones that we actually like to trade. Okay, now you have your algo market structure. The next thing is to look for premium section. So if you look from here, the price have pushed at least more than 50% of this particular move here. So the move from here to here, you look for the 50% retracement. From here you can see this is the 50% level, which is here. Okay, and the price have already made that 50% retracement, more than 50% retracement. So what are you going to be doing now that you have something like this? You're going to be looking for your order block here, or you look for fair value gap around the order block. So that's going to be your entry. So for instance, if you have your order block at this point here, so you simply pick your position size. Okay, you just want to place a buy limit right here. Okay, at least at this low. Okay, or you use the high. I actually want, most time I use the high because the price might not hit the low. The only point I try using the low is when I'm entering with order fair value gap. Okay, so remember, you want to check the candlestick formation right here. You want to see good candle, healthy candlesticks right here. Okay, impulsive candles right here as the price is correcting that move. So your stop loss should be a little bit below this level. Okay, a little bit below, and your TP should be 1:2, 1:3, or up to this level. Okay, so you can take the final, this is the final TP for this setup up here. So but you must not use this that might give you 1:5 or 6. You can actually decide to use 1:2, but the minimum you can use is 1:2. Okay, so you can decide to use only 1:2 risk reward. So once the price hits 1:2, you are out. Okay, so you are simply going to be waiting for the price to push all the way to the downside, tag you in. The price can actually trace back a bit, put you on drawdown before pushing up to your TP level. Okay, so this is exactly what you are looking for in the market. This is a buy example. Okay, so I'll simply show you a sell example. So sell example, the price pushing all the way to the downside this way, creating this. Maybe at a point the price started to go a little bit above here and to this level. So now you can see the price from here maintain its high. So this high is actually higher than this one is higher than this is higher than this, but this, the current high, moved a little bit higher than this one. With the, you want to see it happen with a wick, but if it did not happen with just one candlestick close, okay, it's okay. So once you see something like this, you have what we call the sweep of liquidity at that point. So once you have this sweep of liquidity, this point, which is that actually happened with a wick, which is better. So once you see this, we are going to be looking at this. Check the retracement that happened from this low to this high, and you check that the price have already moved 50%, which is here, of this retracement. So if you look right here, you can see that this is the 50% move of that correction. This is 50%. Okay, so the price have already made 50% of this move. So you just have to start looking for order block at this zone or fair value gap. So if you are using order block, for instance, if your order block, so you can actually set your sell limit order at this zone, and you simply set your stop loss a little bit above here. Then your TP should be ×2 or ×3, or you take the full TP, which is the previous low. Okay, which is there, going to be your full TP. Then once the price push all the way to the from here the price can actually move down again, break this low, then push back to your entry and sell. These are the things you are going to be looking for. Another way around you can make entry on this trade is using fair value gap. Okay, so most time you might not be waiting for all these things to happen. Let's say that the price is buying, okay, and you are looking for buying opportunity, and maybe at a point the price started to clear a low and give you 50% retracement at this point. So when you have 50% retracement, you can see we had our sweep of liquidity. You check the correction, and the correction is more than 50% of this particular move that swept liquidity. Now you can see the price have moved 50% of that move, or the price have corrected 50% of that move that swept liquidity. So what you need to do is to look at this point, this particular retracement that is correcting. You want to see that the price impulsively move away from this zone. You want to see the price impulsively move away from this zone. You want to see healthy candlesticks around this zone. So in that healthy candlestick, if you happen to see order block at the fair value gap at this zone, for instance. So if this is fair value gap here, let's say you have a gap there and you still have your order block here marked out. So you have two entries here. Either you take the entry at fair value gap, or you take the entry at order block. So most time the price, when you have fair value gap, might not come down to your order block. The price might just do this, retrace back to maybe push up, break this high, push down again to your fair value gap, correct the gap and start buying. So what we do is that we simply take advantage of this. We go long at fair value gap. Okay, your stop loss must be below here. Okay, if the price push into your fair value gap and decided to, after the correction and did not move up, come down here, you can make another entry at this zone, or you can just hold your one entry. Your stop loss is here. Once the price go against you, maybe hits order block and still not reverse and hit your stop loss, that's all. You wait for the next setup. But most time the price will reverse from the fair value gap without hitting order block. So you want to always check, if you have fair value gap, you target that fair value gap before the order block. Or if you now have the order block, if there's no fair value gap, you target only order block. But if there is fair value gap, the price disobey the fair value gap, you still be waiting for the price at the order block, which might be respected. So these are the two ways to take this trade. Okay, so I'm giving you the sketch of how to take the trade while using your order block or fair value gap. So let's go into the chart and see if we can see any clear example. So you can see that the price is pushing down, but at this point we had something. The price created a new low right here, if you can see. But unfortunately the price, look at the high that created that low. You can see this is the high that created this particular low that we have here. Okay, but at the point after that, the price actually swept above that high, which is a kind of sign of change of trend, but not confirmed. You can see you have a new high here. Then the price pushed all the way to the downside. Instead of creating a new low, the price actually made a higher low. So this low now is higher than this. So we are completely, what you are seeing here is actually a sign of change of trend, which here you can equally call this place change of character right here. Okay, so the price actually breaks structure above here, kind of change from a downtrending vibe to an uptrending vibe. Okay, now that you have something like this, what is the next thing you're waiting for? You just want to see the price to clear this low. If the price clear this low, sweep below here, then we look for our order block or fair value gap. So let's see what happened. Let me just play it this way. So you can see that the price couldn't come back to the other level. So let's see what the price do next. So the price break above this, which is confirming our uptrending market now. So we have a new low here. Okay, we have this as our new low. So let's see what the price is going to do with this low. Okay, so we play along to see. So the price keep going up. Then okay, let me pause this. So you can see the price created a new high. Okay, so we keep moving. Price created a new high, we keep moving. So let's see, and price have given us a new low, a kind of, but not actually until, remember, before you now mark a low, okay, I will not just put line here and say this is a new low. No, the price must have cleared this level here before I will now mark that this zone down here as a new low. Okay, so we don't have a low yet. The low we have is down here. So we have this. I want you to understand how to identify all these things. This is the high, previous high. Okay, and this is the low that brought about the break of this high. So the next high is this. Then we have a potential low, but not a low yet until this particular move clears this high. Okay, so this low is still valid. Okay, So let's play ahead and see what happened next. All right, so I might increase this. Okay, so let's see. Can you see the price have cleared this low? So, and at the same time, okay, we have a low here. We have a low here now. But now, if you pay close attention, you can see that the price, after sweeping this low, setting up a new high, okay, gave us a sweep of liquidity immediately. So you have this price swept this liquidity here. So you have a sweep of liquidity here. So this is our setup, guys. I want you to pay close attention here. So you have our setup here. Now, if you look, we had our sweep of liquidity, which is the diagonal market structure. Then after that, we look if the price is going to correct this move. Already the price have corrected it 100% and even break above it, which is very nice. So the next thing we are going to be looking at is we have checked the sweep of liquidity, we have checked the market structure, we have checked the discounts and premium. Now what the next thing is going to be we are going to be checking is the candlestick. You can see that this is impulsive candle, which is very nice. Now where is our order block? You look at the last opposite candlestick. You can pick this as your order block, or you can rather mark the one behind as your order block. So what I would do in this case is to mark my order block this way. Okay, so what next am I going to be doing? Now if you look closely, we have a fair value gap, right? Look at this place. From here we have a gap from here to this place. Okay, so this is our fair value gap here. So I love this trade. So two things, either the price is going to hit our order block or the price hit our fair value gap. So what I need to do is simply pick my, now that the price that I've made this move, I'll simply pick my buy limit order. Okay, I'll place here. Stop loss is still going to be below this. Okay, pay close attention. Your stop loss should be below this low here, which is this level, a little bit below it. Then your TP is going to be 1:2, at least 1:2. So now if you look at this setup, it's very nice. So all you need to do is to pay close attention. If the price push into your level, then you'll be triggered in. Okay, so let's see what happened. I think the price is still pushing up, but if the price did not hit your level, there's no problem. You wait for the next level. So let's see what the price do. So the price keep kind of pushing up. Let's see, and boom, the price actually come to our level, which is the level we are going to be entering. Remember, I couldn't measure this. I told you guys you are going to use the center, okay, the middle of the zone. Okay, so this is the middle. I couldn't check it very well. So this is the middle of this so this is the middle of this our order block. So our entry should be here. Okay, let me confirm that. Yeah, that's supposed to be our entry. So you shift your entry to the middle of your order block. That's the first entry anyways. If the price didn't respect it, the price is definitely going to respect your order block. If it fails, then good and fine. Price can actually hit your stop loss. So the price with this spike triggered us in and push us into profit straight without wasting time. So you can see a clear example of a trade which was taken from fair value gap instead of order block, right? So if you look here, the price actually let's say if you used 1:4 or so, this is 1:4 on this trade. So you can actually use one. I told you guys, depending on your risk appetite, for me the minimum you can use is 1:2, right? The minimum is 1:2. You can set it to 1:4, 1:5, 1:6. Okay, but always make sure that once the price go 1:2, you can set your stop loss at break even, or you can lock in some profit. Okay, so because the price can actually give you more than 1:4 or 5 or 6 with this setup. Okay, but you must make sure that you have lock-in profit once you hit 1:2. So this is exactly how to do this, how to take this trade. I've given you a clear chart example using gold. You can do this on currency pairs, you can do this on synthetic indices. Okay, I hope this is helpful. Thank you for your time.